morning all, hope you're doing well. So the risk calculation is quite risk on at the big picture, and the technical scores has improved a lot. We were at 5 on Friday, but not last Friday, the Friday before. We were really low on the technical scores, so it was an excellent time to enter. And I took profit on my S&P because we hit 100, so it was a good time to exit. I entered when it was nice and low, and then you exit, you descale, take profit when we're nice and high. So that's the logic there. So as long as this remains green, then I'm looking to buy. Okay, indices, right? And of course you have to remember how the foreign exchange market respects those risk on and risk off flows. For example, the Australian dollar, yen would be very sensitive to risk on or risk off. So you need to understand the correlation of forex pairs and risk appetite. It's really, really important. In fact, it's vital to understand. Okay, QDB scores, and we can see we've got a little bit of red up here, which isn't so good. See, what that happened is that they've gone long EJ, Swiss J, CAD J, AJ. They're going quite long, these pairs, so these are falling. So I think probably these should come down on their scores. So that's of note. In terms of yen, we're going to remove it from the robot, but we'll talk about the robot at the very end of the video. But do note that we've lost some scores on AJ, EJ, the Swiss yen and CAD yen, and we've had an increase in score on the Euro Swiss and the Kiwi Swiss, and then the Pound Swiss as well. So that's of note. It's a little bit of Swiss weakness, a little bit of yen strength potentially. So that's how you can use the scores. And that's that. So we can talk about the indices. So drag that across, and now gold is slightly sideways currently, but what I think is going to happen is it is going to fall because the US Treasury yields are going to probably they're probably going to continue to pump. So if these go green, all of them, then it's kind of like a headwind for gold, because if the yields are pumping, there's not much. The big fish would rather put their money in government bonds yields as opposed to gold, because they're getting paid really good interest on their government bonds. So if the yields rally, this is going to fall. So I think maybe if I was feeling like a flutter, like a slight gamble, I would be selling this with a stop loss up here. But I think I'm just going to be careful today. We've got a big data today and tomorrow, and so it can go either way. But I think what's going to happen is that US Treasury yields will pump today, and this is going to fall. But the only trouble is we don't have any indication of a direction because we're so sideways. But I think this should fall, and I would have a stop loss at 1950. No doubt we're taking a lot of liquidity on this move, and if this the yields pump, this is going to fall. Okay, regardless of the sentiment is really, really powerful, but there are fundamental forces at play. Okay, so that could be a decent risk to reward, quite a cheap stop, a decent target at 1917 area. Okay, but I'm just going to monitor, I think, and I've got some work to do on the sheet as well. I'm going to put in fundamental factors into the QDB scores. Let's look at DAX. Now, they were going long on DAX, so I'll show you. That's them guys going long. So quite aggressively long, so we fell, and then we hit support, and it looks like they're going to sell it again. So that would be perfectly normal and fully expected, because they love to sell indices. They're programmed to do it like... they're conditioned, a bit like Pavlov's dog, if you know a little bit of psychology, is that they get rewarded for their bias momentarily, and then it's like basically like gambling, but they're being rewarded temporarily for that bias, so they get paid slightly, and then that reels them into a trap. So they love to sell, and if we do fall, that's going to make them want to sell it even more. Right, so it is what it is. So it's going to make a buy in the next 45 minutes, and then we'll have be able to create a box underneath like we did there. So it's typical. It's just retail, guys, isn't it? We're talking about like herd psychology, and it's quite amazing what they do en masse, and how price reacts against them. So for example, they sold. I was saying about the S&P, we should be above, and we really did propel higher. So that was 100% accurate forecast. So I'm quite happy with that. And they'd sold it, so we can perhaps create a box here. Yeah, we've got this long wick underneath. Rectangle. Oh man, come on. It's awful this, isn't it? It's really rubbish. Oh god. The amount of time I spend waiting on this remote desktop is crazy. But we should be above this box. Okay, so this is possibly just like a nonsense thing where it might try and reel more people in, but we should be above this level here. God, it's so slow, isn't it? It's crazy. But yeah, because they'd sold it, we should be above here. And you can see we cleared this resistance on the left as well. And the only thing is that the yields pump, it might put a bit of headwind for this, so we need to keep an eye on those US Treasury yields. And just 30 if it loads, and we're just sideways in US 30, but we can see it technically fairly strong. And this is that congestion that was really annoying to trade. This was impacting the foreign exchange market because there was so much indecision. We had to clear this dumb money out. We had to wipe them out the casino, throw them off the airplane, throw them off the ship, and then once we got rid of that cargo, then we could go higher. But there was way too much chop here. You can see it was just horrible. So they had to get kicked out of the casino, and it looks like they did. So we need to move higher in case this happens again. We don't want this to happen again. So they need to be convinced that we're going to fall, and then we'll continue higher. Right now, the robot, it's got an EJ trade. Now the thing is that's quite annoying is that they've gone net long on the euro yen, but they're currently getting paid. So we got the price at the moment of the crossover. It's very accurate, and we should have. We should be. It should be profiting. But unfortunately, what's happening is that the herd are getting slightly paid on their yen bets currently. So we'll have to wait and see. Unfortunately, we did make a really good profit 2 days ago. Yesterday was quite poor, and so it's basically erased Tuesday's profits. But that's one of those things. But by reducing the yen, it should be it'll make the robot a little bit more profitable. And also, it's very risky, the yen as well, because it moves on the risk on, risk off dynamics as well. So that's what it is, and we'll have to wait and see. And we're going to put in a change on the QDB score, so we can include the VIX. And just to say about the Dixie, we've had a break of structure, new super trend, and we've got a supply overhead. So technically bearish, technically bearish, technically bearish. But what I think might happen, because it would be quite annoying, and these possibly going to pump, that we're going to come up and we're going to chop around here between 103.35 to 104.05. We've got a big range to deal with. We might just chop around in that, but technically bearish. Okay, and the bubble, the dollar bubble, which I haven't seen yet. Oh, it's there. Okay. So that's kind of annoying because it was over there. We wanted it to go higher and over here for a sell. But we'll have to wait and see. If it comes over here, it's going to mean it's going to be a buy. All right, so it might be a bit of a tricky one for the dollar. And that's today's video. Slightly longer than I wanted it to be, but we just need to talk about the bubbles at the end and the Dixie. And if you can, keep an eye on these treasury yields as well. And you can just simply add them to your trading view. There's the 3 month, 1 year, 2 year, 5 year, 10 year, 20 year, 30 year. And the dollar yen really closely tracks the 10 year. So just so you know. And that's it. So remember to trade safely. I'll speak to you guys soon.